Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Friday, May 17th, 2019. All right, so as we're heading into midday here, it's almost noon as I'm starting the video, and I wanted to do a quick update on really just my thoughts on the market, what to expect going forward. For the most part, I expect, as I mentioned this morning, did an update pre-market, and I expect some chop. What I mean by that, noise is what I like to refer to it as noise. I'll get to that in a second. So basically, remember yesterday we had both SPY and QQQ reversing off my uppermost bounce targets. That was on the 60-minute charts. We'll get to those in a second. And as I said this morning in the update pre-market, at the risk of oversimplifying things, I can't overemphasize that enough, or emphasize that enough, I should say. At the risk of oversimplifying things, it appears to me a solid break above yesterday's highs would be bullish, while a solid break below Monday's lows would be bearish. And anything in between is simply what I call technical, what I call noise on the charts. What I mean by that, what I mean by noise, well, it's, I make a lot of terms up in trading. Noise is what I call the chatter. If you look at the definition of noise, Google search it, you're going to get the technical definition, not technical analysis, just technically speaking. Irregular fluctuations that accompany a transmitted electrical signal but are not part of it and tend to obscure it. So what I do here is I line out a transmitted electrical signal, and it's just replace that with the word a trend. So basically, when you have a trend like this, let's say it's a downtrend, which I believe we're in, noise is the zigs and zags in between. If we're going from point A right here, I can't draw an A with this tool, let's just say from point A down to point B, it is not going to be a straight shot. It never is. So noise is what I call the gyrations, the back and forth. And as long as nothing significantly changes that says that trend is most likely no longer in play, then I consider that noise. So now, being what's happened recently again with the charts, let's just look here. These again were posted in pre-market, so these are reflective of yesterday's close. I'll get to the updated charts in a second. So that is, again, at the risk of oversimplifying it, really where I see the markets right now. We're between a pretty significant resistance level. That is, those were the highs for my uppermost bounce target on SPY, and of course on QQQ we'll get to next, and then Monday's lows, which was my price target, my initial downside swing target for QQQ. Remember, I've focused on the Qs. We'll get to that chart in a second. So now anything in between here, including the sharp rip that we've seen so far this morning at the open, and the subsequent sell-off, which I said in the trading room, we'll probably get that today. Everyone was like, what's going on? Why such a strong rip in the market? And I said, that's the noise. That will probably be followed by a random sharp reversal that probably comes out of nowhere, although that actually was technically triggered. I'll get to that in a second. But so here it is. And again, I don't want to try to make too much of this, but let's just watch and see where we go. We still have levels along the way. This, again, I'm trying to simplify it here on this chart and just tell you it's a pretty big range. And again, doesn't mean if we pop above yesterday's highs, that's an all-in. All of a sudden, everything has gone from bearish to bullish, and it's time to get long for path to new highs. But I can say it certainly puts a damper, and especially if we make a solid move and a solid close, and maybe 2 days green closes above that level, that puts a big damper in the bearish case. Whereas a move down below 279.93, Monday's lows, I think opens the floodgates for a pretty powerful flush down. And right now, like I said, we're closer to the upper end of the range. And so if you're active trading, great if you know what you're doing. But if you're swing trading, try not to make too much out of what happens in the next few days is all I'm trying to say here. All right, so there's SPY. QQQ, same story. There's yesterday's highs, which was right around the top of my bounce target zone. And then Monday's lows, which again, that was my initial downside target. In QQQ, the active short trade actually hit the price target, but in pre-market. And again, that's why I think futures are to me the way to go. I know everybody doesn't have access to a futures account, but when you trade futures, most of the moves lately, especially to the downside, price targets and all that have been hit in the after-hours session, and we've seen a pattern of institutions coming in and buying at the open. I'll get to that in a second. All right, so these were again from this morning. I showed there's that megaphone pattern in ES. We need to watch this. We're going to do an updated chart in here in just a second. But so far, that's just a big descending megaphone pattern, and the downtrend, as I say here, is clearly intact. This is a downtrend market making a series of lower lows and lower highs so far. As long as it remains above that downtrend line, plus you can see it ran right into that 28.92 resistance, had a reaction, and so far we did this today. We'll get to the updated chart in a second. Again, you can see I timestamp all my charts, time and date stamped. This was 8:30 this morning, and then there's YM. I had a new member of the site inquired, "Hey Randy, do you do updates on the Dow and Dow Futures?" Absolutely. If you're a member, let me know. The Dow is only 30 stocks. The S&P is 500 with 11 different sectors in the S&P 500. So it's much more representative of a broad market. And there's a lot of overlap. The Dow and the S&P are much more closely related than the NASDAQ 100, which is very tech heavy. And it also, the NASDAQ 100 doesn't have any financials and certain other sectors there. So trade Dow if you want to. You're going to see pretty much the same charts as you will in the S&P 500, just different numerical levels. That's all. So there's the megaphone pattern. There's Monday's lows, pretty good support, and that's what we need to see. The bears want to see that level go. Bulls want to see this taken out. And I have on the Dow futures, again, this is YM or YW. The YM. I typed it wrong here. It's YM for the Dow futures, and 26,096, so we'll call it 2600, somewhere in there. That's the overhead resistance. And then finally, just a great display of technical analysis. The market topped on May 1st. That's when all the indexes peaked, and that's when I posted this chart here. This is the NASDAQ 100 showing my final near-term swing target down to around 72.75, and that again was the day the market top, and that's when we hit it on Monday. So again, it's where make clear there's very good support there, not just here on the futures, but of course the levels I showed you on the QQQ daily chart, SPY. And so right now, the point being is this is a couple things. Number one, the technicals are working. That's good to see here, and they're playing out. And so far, this was a very biggest correction we've had yet, down to support. So as of this point in time, I'm still just viewing this as an expected oversold off support counter trend bounce. It can certainly morph into more, but again, we have to watch those two key levels I just showed you on the daily charts. Okay, to update those two charts, this is the same when I posted this morning before the market opened. So there's today's candle. We failed. We had an impressive rally out of the gates after pretty good sell-off last night in the futures. Again, that's where the big moves have been coming. We'll get to those charts in a second. But you can see so far we even failed shy of yesterday's highs, and we faded yesterday's green candle. So to me, that's pretty bearish, and I'm going to go over the futures charts in a second and explain something that my trading style. I'm one of a dying breed. There may even be very few of us, if any, out there. I'm a tape reader. Tape reader, if you're familiar with the late great Jesse Livermore, that's what he did. I'll sit and read and try to interpret price action from the charts, intraday, daily, what's going on. And right now I'm just kind of taking it day by day. This is a battleground between bulls and bears, between the green and the red lines right now. And you had a couple big green candles. Again, oversold, divergences on the 60-minute charts. Everything was in play that said bounce was likely off Monday's lows. And so now when you see gains from a big day like yesterday wiped out, that's pretty bearish. Next up is this. This is where the bears have their targets set. And I'm speaking metaphorically, guys. Really, it's just supply and demand dynamics, buying and selling forces. But it does show you, and I'm going to show you something here in a second I think is pretty compelling on the futures charts. And so if they wipe out yesterday's gains, all of it, that'll probably be enough to take us down through Monday's lows. That's my guess. So you probably don't even have to wait for 278, 280ish to break. You'll probably see it if they wipe out yesterday's candle. That will have a lot of bearish implications. Why? Because again, everybody that bought the dip in the last few days, or started buying when they saw the market going up, they would have been wiped out at that point. QQQ, same story. Again, this was yesterday's candle here, right up to where my bounce top target zone was, reversed, and had a strong rally out of the gates today. So far, that was met with selling. We can look at it here. You can see what it looks like. This is what it looks like on the 1 minute chart right here. So this is today's low, ramped it up, and as I said in the trading room, it's right here. This is, tried to warn of that earlier, that hey, you're going to see some back and forth, big moves. Good day to stand aside if you don't, if you're not an active trader. I was even gonna, and I still do plan to take some time off today. And I said this is just the noise that I referred to earlier today. Futures are down, blah 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 blah, and we had a big ramp up at the time, and I said that would probably be followed by a sharp dump at some point today, quite likely from a random, unpredictable starting point. So far that's what we've had. Actually, although it wasn't so random, I'll show it to you in a second here. There was something I noticed this. I was tracking this trend line off the lows this morning right here, uptrend line, 1 minute chart, nice and clean. And once that broke, that triggered the selling, the reversal. So you can see they faded a good part of today's ramp. Let's get to the, I want to show you something on the little bit longer term futures charts here. Okay, as I said, I'm a tape reader. I like to study the action, what's going on, what's happening in the market. So here's our highs right here. We're looking at, before I start out here, NQ, NASDAQ 100. That's my preferred trading proxy, the futures. There's the top in the market. Here is the downtrend so far, and here was Monday's lows. Let me mark this up for you. So you have Monday's low right there. You have the highs right here. Now, what this shows you round the clock trading. This tells you, paints a picture. These are the futures, and what you can see is you don't have the daybreak lines right here because futures trade around the clock. You have daybreak as far as when these dashed lines here are when the day rolls. In other words, after midnight, you go to the next day, from Monday to Tuesday or Tuesday here to Wednesday. So that's really not relevant to you guys trading in the regular session. What is, if you look at the volume bars down here, you don't have to add the trading days. You can just see when the trading days start. This is when, and I talk about this all the time, I say that the big boys, the starters, don't step on the field until 9:30 a.m. I always talk about that. What I mean by that, who are the big boys, the starters? They are the institutions. Retail trader gets to play and have fun at night and frolic in the futures. And you can see that's where there's been a clear pattern of futures drifting lower at night, even when we were heading down. And then you'd see the buyers stepping in at the open. So let me just talk about recently here. And you can see again, buyers stepping in right here. There's when you see these big blue volume bars spiking up, that's the open right there. I'm trying to grab it with a circle tool. Open. Here's the open. So you can see the ramps at the open. That's when the institutions step in. Although once this downtrend got going, we saw a different pattern. And what was happening then, I guess I'll back up here. So what was happening, you can see, okay, they bought the open hard, but then something different started happening. They started fading that. So all the institutions that stepped in, bought up the open hard, that was faded. Okay, so no big deal. Try again, buy it up. They kept fading the rallies. This is the nature of a downtrend, guys. Remember, a downtrend is simply a security making a series of lower highs and lower lows. All right, so that continued for a while, and until the point they gave up of buying the open. You can see down here we had a little sell at the open, another ramp, and finally they gave up right here. This day, here's the open. Instead of buying the open, they sold it. That was capitulation. And believe me, there's individuals in there as well, not just institutions. And individuals, a retail trader tends to follow. If they see the market rising, then they start jumping in. It's the institutions that'll jump in right at the gate and start buying. And now remember, we fell to support here. We hit my target. We fell to support on QQQ. So there were a lot of reasons the market bounced there, and that marked the bottom. And then you can see so far since then, again, I'm going to show you the open. Here's the volume bars. This is when the market opened. They bought the open hard. And something happened from this point. Instead of all these rallies getting faded, each time they bought the open, they bought the dip here, they lost money. The longs lost money. Each dip was faded. And again, so you lost. Things aren't working. Hey, something's wrong. Buy the dip isn't working anymore. But here it started to work. There's the open. You can see the ramp up. They faded it, but guess what? They didn't fade it below, so nobody lost. Whoever bought the open, the institutions, individuals, they were okay. They just went back to break even. This was the next day. This was Wednesday of this week. Strong ramp at the open. Guess what? Little fade, but you're fine. This was Thursday's open. Strong ramp at the open. They faded it, but by the close we were still ahead. And then we faded. This is the drift I was talking about. You're seeing the futures drift overnight, and again, look at the volume come in. This is the open right here. Strong ramp. Although something so far is a little bit different. So far, we failed to take out the previous high, and that selling was met, as you can see so far today. And again, the day is still early. Day is young. So far, that's been met by pretty impulsive selling. Where I'm going with this is there's a couple things I'm watching now. We have the makings of an uptrend right here, right now. Again, to be expected into resistance, so we'll see. But if you start seeing each of these previous reaction lows get taken out, first that one, then this one, especially this one, and again, that had implications. We had two tests of that lows there. That will probably open up what I believe to be, I'll call it waterfall selling. I don't want to be overly dramatic, but very impulsive selling. Let's just say impulsive selling to the downside, and then once that low is taken out, that'll probably seal the deal. But I think it'll probably happen when these levels are taken out. So those are the things that I'm watching for. And again, remember how I started this video. We're in a pretty big range, smack between support and resistance on the daily chart. So it might not be as simple as we just go ahead and break down and keep going lower, or we go break out and start to rally. We could just, can't go to the left of the chart here, but just imagine chopping around for a while. I don't favor it. Based on what's happened on the daily charts, I do favor by next week having resolution of this. In other words, a downside or an upside break. That's what I favor. Today, who knows? Let's just watch. Right now, today, the levels I'm watching are this and this. Anything between, that's yesterday's highs and today's lows. Anything between is just noise to me. So, okay, guys, and to wrap this one up, let's just revisit those 60-minute charts. Again, purple lines. The yellow lines were originally my uppermost bounce targets. This was a yellow line before right here. Change it to purple. So that's a failure there. But again, we're not far off there right now. So the markets want to go up. They basically made a test of the purple line today. You can see at the highs. Here's that's yesterday's high. There's today's high. And we're coming in. Remember, I had this trend line here. It goes to the left of the chart there. It goes to right here, these lows back in January, not the lows. This is my primary trend line. This is a secondary trend line. So that one's being tested right now from above. And again, I don't want to make too much of it. As far as other things I see on the chart, I see the PPO rolling down at high levels, clean separation, looking at a potential bearish crossover there. And that's it. We could draw, I think I showed you, we have a rough making of an uptrend line here, roughly a price channel, so that's what you want to watch in QQQ. Just like we had a downtrend line right here, downtrend was broken, and so this is still what I'm looking for, something along these lines. And the SPY 60-minute chart, same story, ran up to my uppermost bounce target zone, the top purple line around 289. Failed there, had another run at it today, fell a little shy so far, pending but not yet confirmed bearish PPO crossover. We'll see if that plays out. Usually you get when you get the clean separation, when you get the lines kind of dancing back and forth, it doesn't mean much, but you look for sometimes these high level PPO crossovers will do the trick and give you a little trend reversal. But other than that, like I said, today might be a little choppy, and I don't expect a lot of resolution. If we pop to the upside, by the way, of this 290 level or 288, 289, 289, 290 we'll call it, A marginal close isn't going to do a whole lot. We'll just have to see what next week brings. It would take one heck of a punch up through here to really, convince me that that's a breakout today. All right, so to wrap it up, really have no idea where we go today, and maybe even Monday or early next week. Let's just watch. It could be a little choppy, erratic trading, as we battle around within those larger support resistance zones, or support and resistance levels. And of course you have the downtrend line too on SPY that was taken out. That I showed you that before on a 60-minute price channel. So maybe look for a back test of that. Might be support. But other than that, we'll just have to see how this range resolves, and we'll go from there. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.